What's up guys, it's Andy here. Welcome back to another episode on the Andy Kandola Show. So today I got an exciting episode to go ahead and share with you guys. My portfolio just hit over $50,000 and it's currently sitting at $51,253. Now, if you are new to this channel, this portfolio is focused on dividend growth stocks. So all the stocks that I currently have in this portfolio do pay me out dividends on either a monthly or a quarterly basis, as well as I am focused on growth stocks at the same time. So these stocks I am eventually hoping that they'll grow over time so I can also make money that way. Now I'm going to go ahead and reveal my full portfolio in this video, as well as my strategy with this portfolio. Now if you are new to this channel, don't forget to subscribe to the channel down below as I go ahead and document what's going on with my portfolio week to week, as well as share with you guys some of my top stocks or some of the latest news basically within the stock market. But now let's go ahead and jump right into it. Now in regards to this portfolio, I call it my bucket list portfolio. This is basically an investment portfolio that I've created that's basically focused on dividend growth stocks. So all the stocks in this portfolio are going to be dividend focused. Now currently the portfolio is sitting at $51,253. Just in the last day I did lose some money in the stock market because the stock market has been a little volatile. Overall it has been climbing up, so that's not a bad thing, but I am expecting that the stock market could go down any day, so that's why my strategy is long term. Now my portfolio is down $352 or 0.68%. In the last week here the portfolio is up $707 or 1.41%. In the last month the portfolio is up $3,116 or roughly around 6.8%. In the last quarter the portfolio is up $4,749 or 13.51%. And then if we just look overall, the portfolio does have a pretty healthy gain here at 17.71% or $5,060. Now as we can tell here, the earned dividends in this portfolio overall are $318. That's basically the goal of this portfolio, and that's my strategy. The strategy is to go ahead and get this portfolio big enough so it can go ahead and just pay me out in dividends on a monthly basis and go ahead and cover all my day-to-day expenses or my monthly expenses. So now just to show you guys how I have this portfolio broken up, I do have the portfolio broken up into 11 different slices, and these are going to be the 11 different sectors within the S&P 500. Now guys, I do use M1 Finance. If you are interested in M1 Finance, I do have an affiliate link down in the description. You do get $10 free with that link. You don't obviously have to use it, but it's a great way to go ahead and start off with a dividend focused portfolio and get a free $10 with it. Now we're going to go ahead and dive into each of these 11 sectors, and I'll go ahead and share with you guys all the different stocks that I have in each sector. So let's go ahead and just jump right into it. Now as far as the 11 sectors go, as we can tell here guys, I have the target allocation allocated from the highest in the technology sector and then the lowest in the energy sector. And basically within the energy sector I have 1% allocated, and I'll go ahead and share why this is as I go ahead and run through each sector. But as far as the technology sector overall, this sector has been doing the best for me because of this current pandemic. A lot of these technology stocks have been kind of the safe haven stocks to go ahead and invest in that have not been impacted by this pandemic as much as some of the other sectors. So I am up about 42% just in the technology sector, which is extremely awesome. So in total I'm up $1,854. Now if we just go ahead and dig into the technology sector, I do have 5 stocks in total. Now I will go ahead and tell you guys right off the bat, the newest stock that I did add to this portfolio is Accenture, and that's probably the reason why it's down, because I do dollar cost average in this portfolio. Now in total, all the stocks that I have in here is I have Apple, Microsoft, Visa, Accenture, and Nvidia. Now guys, here's my strategy with these 5 stocks. All 5 of these stocks are going to be stocks that do pay out a dividend. However, within the tech sector, a lot of these stocks do not pay out high dividends because they're so focused on growth. So the dividends are going to be pretty low on all of these stocks. Now just jumping back into the portfolio, the next sector that I want to go ahead and share with you guys is going to be real estate. Now real estate is a sector that I like because of the high dividends as well as the safety overall. Now if I go ahead and look at this portfolio and I go ahead and focus on that long-term strategy, the way I go ahead and question that to myself is that, hey, where do I see real estate in 20 years from now? Do I see a growth potential in real estate? Do I see it sitting at the same level, or do I see it go down? And personally, I do not see real estate staying at the same level, because at the end of the day, we are always going to need more and more real estate, and because land is so limited, there's only a certain amount of real estate out there. So in regards to real estate, I do really like this sector. Now within real estate, I do focus on 4 companies, and these 4 companies are pretty well diversed within the real estate sector. Now my favorite company, basically one of my favorite companies of all time, and it's my favorite REIT or real estate investment trust, and that's going to be Realty Income Corporation. Now Realty Income Corporation is more on the retail side. Basically they're one of the largest landlords out there that has retail locations, and some of their largest tenants include like Walmart, 7-Elevens, Walgreens, and they did take a little bit of a hit because of the pandemic, because they do deal with a lot of gyms and they do deal with a lot of movie theaters like Regal Cinemas and Cineplexes, but now they're slowly starting to go ahead and climb back up as we are starting to see some good news in regards to this vaccine and this pandemic. Now in regards to Realty Income Corporation, I am up about 21%, and I do have it allocated as 70% of my overall portfolio. Additionally, I do have Prologis Inc., Crown Castle International, and Digital Realty Trust. Now Prologis Inc. is one of the largest companies out there when it comes down to an industrial landlord that focuses on logistics. Basically they're the largest company out there that really focuses and has logistics on lock, and some of their biggest contractors and some of their biggest leases are going to be with Walmart and with Amazon. And additionally, I love CCI. They're basically one of the largest cell tower companies in the United States, and with 5G around the corner, I do see a growth potential for this company. And then Digital Realty Trust is basically the largest data center REIT within the market. So these are going to be my top 4 companies as far as real estate goes. But next, let's go ahead and jump into the next sector here. And the third sector that I do weigh on a bit heavier, and I have 12% weighed into this sector, is going to be financials. Now here's my take in regards to financials. My personal background is within the financial industry. I basically currently work in the financial industry and I work in the insurance world, but previously I worked in the banking industry, and I was in that industry for about 7 to 10 years. And knowing that industry inside out, I don't see the financial sector going anywhere anytime soon, because with this sector, this is something that if the market crashes tomorrow, and if this sector crashes tomorrow, the whole US economy is basically gonna fall. So some of these largest banks out there basically cannot fall, and some of the stocks that I have in here are going to be diversified within the financial sector, so they're not all going to be banks. So let's go ahead and jump into these. Now Main Street Capital is basically a small investment bank. I love this stock because they're a monthly dividend paying stock, and I love their business model. Aflac is in the insurance world. Basically they're one of the largest companies when it comes down to life insurance and health insurance products. American Express, I'm sure we've all heard of American Express. They're one of the largest companies when it comes down to their credit card and merchant systems. JP Morgan Chase is the largest bank out there, so I love JP Morgan Chase. This is actually my favorite bank out of all the different banks out there. Moody's Corporation is basically a credit rating agency. They go ahead and rate different credit instruments like bonds, like preferred stocks. So they're actually one of the more conservative companies out there, but I like the overall growth for this company. T. Rowe Price is a company that focuses on mutual funds and focuses on different investment vehicles, and they're actually considered a dividend king. So they've been paying out dividends consistently for over 50 years. Now I am diversified in the Canadian banking sector, and one of my favorite banks within the Canadian banking sector is TD Bank. The nice thing with the top 5 Canadian banks is that those companies consistently have been paying a strong dividend. And then the last one here is gonna be Bank of America. This is gonna be my second favorite bank stock within the US. So guys, these are basically gonna be my financial stocks, and overall I am up about 17% or $692 within this sector. But now let's go ahead and jump into the next sector here. Now the next sector is going to be utilities. Now utilities, I do have 9% weighed onto this. Basically, I did change some of my allocation, and it used to be at 10%, and also healthcare used to be at 10%. But because I wanted to go ahead and weigh a little bit more on the financial sector, because it's just a sector that is within my circle of competency, and basically I like that sector a bit more and I see a higher growth potential, I did go ahead and change the target allocation on utilities. So utilities, I am up 7% or about $217. Now in regards to utilities, I have 5 companies in here. The companies I have is NextEra Energy, PPL Corporation, The Southern Company, Dominion Energy, and then American Water Works. Now, in regards to NextEra Energy, this is going to be my favorite stock within the utility sector, and that's because this company is focused on solar and wind energy, and they're focused on renewable energies, and they're basically one of the industry leaders in the space when it comes down to renewable energy. So I like the overall growth potential with them. PPL Corporation actually pays out some of the highest dividends, and they basically focus on gas and electric utilities. The Southern Company also focuses on gas and electric utilities, as well as Dominion Energy. Both of these stocks I do like long term because of their business model, and I just don't see this business model going anywhere anytime soon, because people are always going to need to pay for those utilities, and especially with the boom in the electric vehicle space, I do see these companies growing as well at the same time. And then the last company that I have here is American Water Works. Now, American Water Works is a water utility company, and they're actually one of the largest water utility companies in North America. So I do like to diversify within the utility sector, and these are going to be the 5 stocks that I invest in utilities. Now let's go ahead and jump into the next sector, and the next sector here is going to be consumer staples. Now, consumer staples is another sector that I personally really love. Now, this sector I do have a bunch of stocks in, and that's because I see a growth potential with all of these stocks within this sector, and I really do like every single one of these stocks. Now, in regards to the different stocks that I have in here, I have PepsiCo, I have Costco, Cisco Foods, Coca-Cola, Altria Group, Hormel Foods, Procter & Gamble, and Clorox. Now guys, some of these are going to be household brands and household names, and basically with a company like Clorox or Procter & Gamble or Hormel Foods, I basically don't see those product lines going anywhere anytime soon. They basically have some of the products that every household needs, and those are going to be essential products. Some of the other companies that I have in here is Coke and Pepsi. I personally like both of those companies. They're obviously the largest 2 companies within their space, and they're the 2 biggest competitors in that space. Now, Cisco Foods I personally do like. Now, I do deal with Cisco because of one of the businesses that I'm a part of, so I really do like where Cisco's going and their overall model, and they do focus on their investors as well. So slowly this company is climbing and grinding away here. Additionally, I love the wholesale business model of Costco, so I do focus on Costco and Cisco a little bit heavier within this portfolio, so I do have them allocated as far as my target allocation at 20% as opposed to the other stocks at 10%. So these are going to be all my consumer staples, guys. Now, additionally, if we go ahead and jump back into the portfolio, the next sector here is going to be communication services. Now, within communication services, this is basically one of my sectors that pays me out the highest dividends. Now, within this sector, I have 3 companies. I have AT&T, Verizon, and Comcast. Now, AT&T and Verizon are basically the largest wireless communication companies in the United States and basically in the world. AT&T, once they took over the merger with Time Warner Cable, became the largest wireless communication company. Verizon is basically second in line when it comes down to wireless communication, so I do go ahead and weigh pretty heavily on both of these companies. And Comcast, to me, is probably the company that has the most potential to grow within this communication sector. With Comcast, they own CNBC, they own CBC, they own many other media channels out there, and they have a lot of growth potential. And one of the other companies I believe they own is Hulu as well. So I do see a huge growth potential with Comcast. But basically, guys, these are going to be my 3 companies within my communication sector. And overall, we are up about 9% or $272. So now jumping into the next sector here is going to be healthcare. Now, within healthcare, I do have a couple companies. In total, I invest in 4 companies in healthcare, and this is going to be 9% of my overall portfolio. Johnson & Johnson, United Health, Medtronic, and Abbey are the 4 companies. I do weigh a bit more on Johnson & Johnson just because of the safety risk here. And additionally, I invest in United Health Group. They're basically one of the largest companies out there when it comes down to health insurance products. Then Medtronic and Abbey, I just see an overall great growth potential for, because these companies are just growing steadily over time and they do have very strong fundamentals. But that's basically going to be to sum up the healthcare sector, guys. I am up 5.66% in the sector, or $165. Now, additionally, I do have 5% of my portfolio split up into industrials and then 5% into consumer discretionary. So let's go ahead and jump into industrials. Now, within the industrial space, this is actually pretty surprising because I was not expecting a 22% return in this sector, or I should have probably weighed a little bit more as far as my target allocations in this sector, but I am up $323 in this sector. Now, within this space, I do have 4 companies that I really do love. like. My top 2 companies in this sector are going to be Waste Management and Union Pacific Corporation. Additionally, I have Honeywell and General Dynamics. Now, Waste Management is probably my favorite company because of their overall business model. They basically focus on garbage disposal and recycling disposal, and they're the largest company within the space. And then Union Pacific is a railroad company, and they basically are the largest company in their space as well. And then additionally, I have Honeywell and General Dynamics. Now, with all 4 of these companies, all these companies do pay out a really solid dividend, but additionally, they're all focused on growth. So they fit really well within my strategy and within the dividend growth portfolio here. Now, next, let's go ahead and jump into consumer discretionary. Now, within consumer discretionary, this is going to be 5% of my portfolio, and this sector is also up about 21% or $359. Now, within this sector, these are all going to be household names that I'm sure we are all familiar with, but the companies that I have in this sector are going to be Home Depot, McDonald's, Lowe's, Nike, and Starbucks. Now, Home Depot and Lowe's are basically the industry leaders when it comes down to home improvement products. McDonald's, obviously we all know about the fast food chain and the real estate billions that McDonald's own. Nike is a brand name that basically their brand is worth so many billions of dollars. I wear a lot of Nike products and I don't see this company going anywhere. Starbucks is the largest company within their sector as well, as far as in the coffee game. So these are all gonna be retail names that we've all heard of. Now, I really do like Home Depot and Lowe's just because of their hedge against this pandemic or hedge against inflation. Basically, as long as people are doing improvements to their homes and people are buying real estate, I don't see Lowe's or Home Depot going down in price. If anything, I just see them growing over time. So guys, these are going to be my 5 stocks within the consumer discretionary. Now, next, jumping into the final 2 here, the next sector is going to be materials at 2% of my target allocation, and then energy. Now, the reason why I don't have materials allocated much higher is because this is one of those slower growth paced sectors that I don't see growing as much as some of the other sectors long term. Now, overall, material sector has done pretty well for me, and I'm up 18% or $116, but just in the long term time horizon, when I'm looking 20 years down the road, the material sector I just don't see growing at the same pace as some of the other sectors, and some of these stocks don't pay out the highest dividends as well. But the 3 companies that I have in here is going to be Ecolab, Air Products and Chemicals, and Lint. Now, all 3 of these companies are extremely good companies that are basically the industry leaders within this sector. But I have narrowed it down to these companies. I used to have 5 companies in here, but the reason why I actually narrowed it down is because I'm not allocated as much into the sector. So guys, these are going to be the 3 companies there. Now, next, jumping into the final sector, which is going to be the energy sector. Now, within the energy sector, I basically own 3 stocks. I have the top 2 leaders as far as gas and oil products in the United States, or I should say within the world, which is going to be ExxonMobil and Chevron. And then I have Pembina Pipeline Corporation, which is actually the largest gas and oil pipeline supplier and distributor within Canada. Now, this is also a monthly paying dividend stock, so that's also another reason why I really like Pembina Pipeline Corporation. And then with ExxonMobil and Chevron, they're basically the industry leaders when it comes down to gas and oil supply. So these are basically going to be the 3 stocks within the energy sector. But guys, that's basically gonna wrap it up for this video. Hopefully you guys enjoyed this video and basically seeing all the stocks that I do have in my portfolio. And if you are new to this channel, don't forget to subscribe to the channel down below, and I will go ahead and keep you guys posted on all the different moves that I go ahead and make in this portfolio and share with you guys some of the top news as far as the stock market goes. But thank you guys for watching this video. I will see you guys at the next one.